Welcome back. You're watching Your World at 10. The big news of the day played out in Asia today, or specifically in Japan over the weekend. As widely predicted, Japanese voters handed a landslide victory to Prime Minister Shinzo Abe's Liberal Democratic or LDP party in parliamentary elections held on Sunday. The LDP and its new coalition partner, Komeito, together won 76 of the 121 seats that were contested in the upper house. The two parties together now have 135 of the 242 seats in the house. The win has helped Mr. Abe's party secure control of both houses, and this will give Mr. Abe the mandate to press ahead with difficult and crucial economic reforms as part of his continuing Abenomics strategy. Now, this did help the yen strengthen a wee bit in the first half of trade, and we also saw some gains in the Nikkei that helped pull up all Asian markets. CNBC's Lee Su-Share first wraps up all the Asian equity action for you.
The Japanese markets kicked off the week on a positive note after Prime Minister Shinzo Abe's convincing victory at the upper house elections over the weekend. But a stronger yen did temper the rally. The Nikkei 225 only gained about 0.5% in the end. A couple of big movers to tell you about. NEC shares jumped on reports that it would join forces with Hewlett-Packard to develop high-powered servers. Nippon Paint surged nearly 7% after it raised net profit forecast by 20% thanks to strong sales. Chinese mid-sized lenders under pressure today after Beijing scrapped the floor on lending rates. Analysts say they're going to have a tough time competing with the big banks as China pushes ahead with interest rate reforms. On the other hand, strong gains for Aussie gold miners after the precious metal jumped to a one-month high. And that's your Asian Market Minute. I'm Lee Su-Share.
And now we bring you an expert perspective on what Prime Minister Shinzo Abe's win in Japan means for his continuing Abenomics strategy. I'm joined by Dr. Sujiro Takeshita, Director at Mizuho International. He joins us from our London studio. Dr. Takeshita, thank you very much for your time. Let me start by asking you what you expect will be the structural reforms that this majority position in both houses will now give Prime Minister Shinzo Abe the ability to push through.
Well, as you just reported earlier, yes, he has had some quite an interesting success. I call it the sweet arrows that he's given out, but now he's going to have to basically give out some, well, rather bitter pills from here onwards, and that's structural reform. Because not all structural reforms are very popular. In fact, a lot of them are very unpopular. And the first thing that he would probably have to do is to rejuvenate our nuclear energy side. We used to rely 30% of our total energy to nuclear side, but after the Fukushima incident, the actual provision of electricity is less than 3% right now. So to get that started is the most vital part of our economy, which again is not very popular because over 60% of Japanese do not wish this to be restarted. And then onwards, we've got a lot of issues like TPP, Trans-Pacific Partnership participation, which is very much against the will of the Farming Association in Japan. We've got the Medicare side, we've got the labor reform. So he's got a lot of homework that he has to basically write up before the year end.
So what kind of response do you think this harder working reform package is going to have, given that the third arrow of Abenomics really didn't get the kind of euphoric response that the previous two moves had managed to get? So really, what is this going to mean for the ability to help pull the Japanese economy back towards growth?
Well, basically, I would like to think that the transitional stages of Japan would be set through the correct structural reform to be taking place, i.e. Japan to be skewing a lot more to the growth era rather than the conventional, low growth era that only feeds the vested interest of the conventional, politicians. That has to be altered. But doing so, you have to basically destruct the current structure, and therefore it's a structural reform. But of course, there's going to be a very, very severe resistance because, well, these vested interests have been built up over decades and decades in Japan. So it obviously will be very, very difficult. But at the same time, I think all the Japanese public knows that we are basically at the real edge point of having to do this now or never. I don't think you will have a situation where the economic situation is bottoming out very nicely like we're seeing right now, and at the same time the current policymakers getting such a good follow-wind of support.
I have to ask you, you said bottoming up very nicely. If these structural reforms are painful, if they're going to see political opposition, and if they're not going to get the kind of immediate euphoric response that, you know, the moves by the BOJ or the first part of fiscal stimulus has gotten, do you expect to continue to see, let's say, a move up in the equity markets in Japan? Do you expect to continue to see a further weakening of the yen?
Yes, I do. I think the market will continue to do well because I think it will transfer into earnings-led market. Until now, we've been getting, as you reported earlier, a lot of policy-related announcement, a lot of these issues that's coming on a macro level. And for that reason, it was a very much news-led market. But from here onwards, I think it will regress back into the fundamentals of earnings side, which I think will show a very good conditions for the Japanese exporters, not only because of the weekend directly, but the implication of that, i.e., for example, the pricing power, the market share, and all these factors would basically flow into the Japanese SMEs after the Japanese multinationals, and then eventually individuals. It'll take time, but it is progressing quite nicely. So I think the feel-good factor on the earnings side is there. So it won't be an acute movement, but overall, I think the undertone of sentiment should remain to be a very good one.
Are you not factoring, Dr. Takeshita, factoring in the possibility of, let's say, a September taper by the US Fed, or even a taper later this year or early next year, and the impact that will have on the dollar-yen?
Of course, I mean, external factor is by far the biggest, negative or a positive factor. Of course, people point to Abenomics as the reason for weakening yen. I don't necessarily think so. I do think that they helped, but the biggest factor is the comeback of the U.S. economy, definitely. So yes, external factor, and let's also not forget about the European situation as well. People tend to forget about it, but structural problems there in Europe still persist very, very strongly, and it could be triggered from any of the nations in Southern Europe. So those are the external factors, and I'm speaking under the assumption and hypothesis that these things don't blow up to pieces, because if it does, of course, the consequence will be very, very big.
And how are you looking at the China leg or the China angle to this growth story? We've seen a slowdown in China over the last several months now. It reflects in the data. It may be a purposeful slowdown by the Chinese government, but it's a slowdown nonetheless. What will that mean for Japan being able to continue on the path towards economic reform and growth?
Well, last year, as you know, we had some political issues with China, and for that reason there has been a downturn of the Japanese trade. That is going to be mitigated this year. That said, 70% of our trades are B2B, business to business rather than business to consumer. So obviously, if you're seeing a macro side of the adjustment on the Chinese economy, obviously the Japanese company will be affected. However, that said, Japanese companies are more and more trying to diversify their production bases and their business structure away from China, diversifying into other Asian nations such as Vietnam, India, and Malaysia, Indonesia, and the Philippines, etc., etc. So basically, there isn't that much of excessive inclination towards, business in China as it used to be. Although, of course, if there is a downturn from the macro level on the B2B business, it would hurt the Japanese corporations without a speck of doubt.
So do you think that Japan has finally turned a corner? I have to ask you this question, even though we're not fully sure of what these further structural reforms will mean and how long they will take to take hold. Does this mark the moment that the Japanese economy has finally turned the corner?
I would say that there's been a very big transitional changes, for example, minds of the regulators and just also the authorities as well. They're much more verbally oriented, they're setting up targets, and I think the Japanese corporates also know that this could be possibly one of the last chances that they can get out of deflationary state. So I think all the players that are involved probably knows that this possibly could be the last chance that they could bet on. And for that reason, I think the attempts to get out of this deflationary state is quite serious and real.
Will what the BOJ has done suffice, or do you see, or are you factoring in further monetary easing by the Bank of Japan and an even bigger asset purchase program?
Well, I think there will be a continuation of both of them, but not to a point that you saw earlier this year. There were lots of verbal intervention, almost like a positive shock treatment to the market. But from here onwards, I think it will be a no surprise if BOJ did say the same thing that they've been saying, i.e., which is unlimited easing, purchases of ETFs and REITs. These things have already been factored into the market. I think from here onwards, I think what we have to see is a fruit of these policies. That is, again, corporate earnings coming back, thus maintaining much better employment structure, and also possibly pay income as well, which will eventually go into private consumption side as well. But of course, that's sometime in the future.
All right, so my final question to you, Dr. Takeshita, is that given this optimistic outlook that you have for Japan, where do you expect the yen to trade, let's say, over the medium term? Do you expect that 100 to the dollar will be a realistic level?
I would think so, yes. If you look at PPP as well, that's about the level that it suggests. But of course, it does tend to be very, very volatile because of external factors. The problem with Japan is, as I said at the very beginning, we tend to import quite a large amount of oil and also LNG, and we are running the record high level of trade deficit in the recent years. So basically, this is becoming a very big thorn in the throat for future advancement of the Japanese economy. Biggest problem for the industrial side right now. So this has to be mitigated, of course, partly through a rejuvenation of nuclear plants. But if the yen reaches, for example, 110, it really would start hindering us. So that would now become a problem. So far, this week in the yen had been a very good news for Japan. But if it reaches over 110, that's a break-even point for, from the industrial point of view, that the yen actually would be negative to Japan.
So that kind of depreciation would prompt the Bank of Japan to rethink some of its policies?
I certainly think so, especially, but I would say that it's more to do with the acuteness rather than the level. And that's what the authorities do not like, because corporation can eventually and gradually cope if the foreign currency deviation is, is changing. But what they cannot cope with is a sudden and acute movements. And this is, when the authorities do step in and try to mitigate the situation to even out the volatility.
Tell that to our Indian corporations right here at home who've been suffering a weakening rupee for several months now in sharp moves. Dr. Takeshita, I appreciate you joining us. Thank you very much for your comments on the future of Japan.